I got to tell you, for years, I really marveled at the pace that individual investors, the outflows from equity mutual funds, and then in more recent years, even ETFs. Now, two trends of note, though, since the 2001 crash. We've got rolling net flows that normally turn positive after the bull market begins. So the bull market starts, and then people start to invest. Then, inexplicably, they start to get out of the market. So they start to get out, but the market keeps going on, particularly 2004, 2014, both times. And it leaves investors out of the market in these amazing life-changing rallies. So investors now, at this moment, they're finally getting back into these funds and ETFs. The rolling 12-month average is over $100 billion right now. And my question, though, are they going to hang around, or are they going to start guessing at tops, folding their tent, and making the same mistakes they've made over the last 2 or 3 decades? Joining me now, CEO Rob Luna of SureVest. Rob Luna joins me now. You know, Rob, and listen, by the way, it's not just obviously retail investors. All day long, you know, investment pros are guessing market tops, and they're making these predictions. I mean, from your vantage point, if you're an individual investor and you're sort of late to the game, so to speak, should you still be getting in here? Do you think investors, individuals, should still be buying and piling into this market?
Well, I mean, look, obviously, Charles, as you know, it depends on your time frame. If you're going to be in this market for the next 5 to 10 years, it probably really doesn't matter. And importantly, if all you're trying to do is capture market returns, it probably doesn't matter. But I don't think the people that are watching your show or listen to me are trying to just be average. And so, you know, I very rarely in my career have bought in the entire market. Times like '09, yes. Pullback last year, yes, where you see these huge declines. But look, this is a market of stocks.
But you've had exposure, though.
What's that?
But you do have exposure. I'm not saying buy the entire market. I'm saying should they own some stocks?
Absolutely. Always have exposure. But right now the market's expensive. But, you know, what I did yesterday with my own money, Charles, is I looked at a company like the day before, Coinbase, that reported great earnings. People didn't like it because of a news headline yesterday. Sold it off 8%. That's what I do. I try to buy great companies that the rest of the market doesn't understand, invest in those. Today the stock's trading up. That's what you have to do, is you have to find your opportunities and things you can have conviction in.
Yeah. Yeah, and for me, by the way, my mantra to everyone watching is make investing a lifelong endeavor. Yep. Not for the next year, 5 years, but for the rest of your life. And I do love what I am seeing, because investors have been coming in. We do have this investment revolution. Now, the only problem, because folks are working hard doing their own due diligence, like the tips you are giving, they're following those. So the IQ is going up. The EQ is where we got a problem. Now, according to Magnified Money, a survey there, 66% of investors have made impulsive or emotionally charged investment decisions that they later regret. How do people get around that, Rob?
Yeah, I mean, look, that's the biggest problem, Charles, is that people are their own worst enemy. They're making emotional investments. It comes down to a couple of things. Number one, you said educate yourself, because you have to have conviction in what you're doing. If not, you get shaken out of things. The most important thing, though, is you need to have a plan that you follow, irrespective of the noise. I have a trading plan, I have a dividend income plan, and I have a growth plan, and I follow that irrespective of what the noise is.
32% of individual investors admit that they've actually traded while they were drunk. 37% said they've lost sleep for one reason or another. Even 30% said they've cried. Now, I think I've done all three in the same day. I'm just joking. But what do you say to folks like that?
Yeah, I don't know. I mean, when it comes to crying, you know, there's no crying in trading, Charles. You can't be crying. But in terms of losing sleep, I think I slept 10 hours in all of 2008. So I absolutely understand that one. In liquid courage, you're probably going to take on too much risk. I don't recommend drinking while you're trading.
Okay, real quick, I got a minute to go. How much time should the active investor / trader put into this market so they can get a Lamborghini like yours?
Well, it's a Ferrari, Charles. A little bit of a difference. And hey, I didn't get that Ferrari from trading.
We don't know the difference, my man.
Well, I got that from building a business and working my you-know-what off for 17 years. But I'll tell you what, trading is great. It's part of a plan. The one thing I want to say about trading, though, guys, is there's not a great trade present every day. Have a trading plan, look for your opportunities, and stick to it.
Don't force the issue. I love that. Sometimes, you know, as Cool Hand Luke said it best, sometimes nothing's a real cool hand. Rob, enjoy your Ferrari. We'll talk to you next week.